Hello and welcome to another edition of Client for Life. We're going to send a blast out this week just based on interest rates alone. Most of the big banks now are repricing their investment portfolios, which is a great reprieve because, as many of you remember, last May APRA came out and tightened the regulations. And look, sometimes it's hard to understand what's actually happening when these regulations change, and you know, we all sort of suffer the brunt for the short term. But just as an example, let's imagine that last year one of the big banks actually did $5 billion in lending, and APRA came out and said, well, we want you to have a 10% additional buffer. So for example, last June, $5 billion in lending. This June, they'll be able to do $5.499 billion in lending. So most of the big banks now have complied with the APRA regulations of needing that extra buffer of 10%. So we're going to start to see some really dynamic reshuffling of investment opportunities. As you all know, portfolio offerings change all of the time. And currently, variable on your home loan, we're getting about 3.99% at the moment, and interest rate fixed, principal and interest payments is about 4.1%, which is stunningly low. Now, investment rates are very interesting because if you were on 4.8% 5 months ago, you can achieve between 4.3 to 6% at the moment. Now, if you're prepared to fix your investment loan, we can go as low as 3.99, and in fact, one of the big banks came out this week and said 3.75% for your investment loan if you're prepared to fix it and you don't want to pay any of the principal off. So there's some really interesting offerings out there at the moment, and what we are finding is, which is very, very annoying, is valuations. The banks' valuers are being scathing on vals. We have gone from 18 months of just about any valuation coming in on contract price, purchase price. I've had probably the worst run of valuations in the last 2 weeks that I've had since the global financial crisis started, and I just think it's nervousness with the Asian investor market being under such tight scrutiny. I think there's been a ripple right across lending. I also think that with the election, I really do. And here's a classic example. We're settling 5 apartments at the moment. 4 that we did a month ago all came in on contract price. The developer decided to sell developer stock, which was actually on the top floor. City View's a much superior product, $35,000 under the valuation of the one below it that was looking into a building with no city views. Now, there is no rhyme nor reason for that. So I think on one hand, the banks are coming out on the front foot with some very, very attractive deals, particularly if you're prepared to lock in, and on the other hand, their risk profile is through the roof. So I think it's just a sign of times to come up until the election. I think once the election's over and done with, we can all sigh with relief and get back to business as usual. So I'll end on that note. Always available, lynne@solidgroup.com.au for a comment. Thank you again for listening. Take care.